What's up, guys? Matty Guys here. Welcome back to another episode of Investing with Matty Guys, where I share my investing journey with you guys, specifically when it comes to income ETFs. Today, I'm going to answer the question, will BTCI ever stop paying distributions or dividends? This is in response to a comment that I received recently on one of my recent videos. And I had compared BTCI to like owning rental property where, because we're in a pretty nasty bear market at the moment. So I think this is actually a good question because people are concerned that if BTCI crashes too much or declines in price too much, will the distributions just stop? And the short answer to that is no, but we're going to get into the mechanics. And I had basically compared BTCI to owning like rental property where like if you own a rental property and it's generating cash flow every single month, you really care if the value of the property fluctuates? Not really, like, because we bought it for income, right? Not for just pure price appreciation. So, and that cash flow allows us to weather the storm a lot better. And basically the question was like, well, what if your tenant stops paying you, right? Just like what if BTCI stops paying a dividend? And so that's what I wanted to cover here. I think it's a good question, but it just, I think it stems from just not really understanding where the income is generated from BTCI. And that's what we're really going to cover and how it differentiates itself very much from other like traditional types of operating companies. And we use I use Coca-Cola as an example here. But yeah, so like what happens if BTCI stops paying dividends? I think, like I said, it's a good question considering that we're in pretty tumultuous times right now. Right. But it assumes that BTCI works like a traditional dividend paying stock, and it doesn't. It's not even close. All right. So BTCI doesn't pay like a traditional dividend that's based on the profits of a company or whatnot. It pays distributions solely from an options-based trading strategy. All right. So take Coca-Cola, for example. They pay dividends basically from business profits. So, they sell, I don't know, what, tens of millions, maybe hundreds of millions of products every single day across the world. They have massive infrastructure. And after all expenses, profits get paid and distributed to the shareholders, right? So selling product, managing costs, growing market share, that's how Coca-Cola and traditional operating companies pay out their dividends. BTCI does not do any of that, all right? It's purely options, not products. They're not selling any products. They don't have like massive infrastructure to manage. They don't have to negotiate, lease out hundreds of thousands of square feet for manufacturing and distribution and all this stuff. They're just trading options on an underlying asset. That's literally all they're doing. So they hold Bitcoin exposure as the reference asset, and then they implement a rules-based options, basically a covered call strategy to generate that income, right? So, and that income comes from the options premiums, which comes from the volatility, depending on what the market does. All right. So options-based trading strategy, not a traditional style operating business. That's a key difference, guys. So distributions are literally the business model for Neos, which is the founder, like that's the company that created and manages BTCI. They have a lot of other income ETFs as well that are run in a very similar fashion regarding the covered call strategy. But guys, literally the distribution of these income ETFs from Neos, that's literally their entire business model. That they exist to run these income producing ETFs. So for example, if Coca-Cola were to miss a dividend for whatever reason during any one given quarter, that wouldn't be the end of Coca-Cola's business. Like they would still have their entire infrastructure. Maybe they're going through a hard time. Maybe the stock price might sell off a little bit, maybe because it indicates some rough times ahead. Who knows? But the business itself is still there because their business isn't the dividend. It's not the distribution. It's all the products that they sell, right? And that will still exist. Okay. But if BTCI decides not to pay a distribution or a dividend, whatever, I call them distributions, but then their entire business would cease to exist because that's what they sell, right? The distribution, I guess you could argue, is the product itself. And so they're basically their core value proposition here would completely collapse. And I don't see any reason why that would happen. We're going to get into some specific like worst case scenarios where maybe Neos decides not to do a distribution or can't do a distribution. I don't think they would decide not to, just maybe they couldn't. It would be an extreme scenario, but really paying distributions or not paying them, that is not optional. Or they would just go out of business. Okay, so when would they not pay a distribution? These are very, very extreme scenarios that I think are very unlikely, but we'll get to that as well. So does Bitcoin go to zero? And this would apply to really any of their income ETFs. Did the underlying asset go to zero, or did the trading volume and the volatility and essentially the options market for that asset completely collapse? Those are like really the only two scenarios where I could see Neos not paying a distribution on any of their income ETFs, or specifically with BTCI here. So having no active options market, which basically means there's really no meaningful premiums to collect. It would be very difficult to implement a covered call strategy on something that doesn't have much of an options market, doesn't have a lot of volatility, doesn't have a lot of trading volume. Guys, is that the case with Bitcoin? No, not at all. Not even close. Like the volume on Bitcoin is just ridiculous. Even as the price collapses, the volatility is spiking. That actually increases premiums. So Neos can sell the same contracts for a lot more money, and therefore also reduce how much of the percentage of the portfolio they sell the contracts on, leaving more of the portfolio available to recover once Bitcoin does, right? That's how their option strategy works in a nutshell. That's part of it anyways, right? So for me, investing is all about probabilities, guys. There's no guarantees, and I don't live in fantasy land, so I'm not going to say that the worst case scenario can't happen, but it's about probability, at least for me anyways, when it comes to investing. So sure, could there be an absolute worst case scenario where Bitcoin crashes to zero, the trading volume completely evaporates, there's no options market anymore? Sure. I would argue, though, that we would probably have much bigger problems going on in the world than what's happening to our BTCI and Bitcoin portfolio at that point, because of how integrated Bitcoin is in the financial system now, the massive amounts of institutional adoption. Right. So like if all of that were to disappear, which I think is extremely unlikely, outside of a massive black swan event, that would probably have a very significant impact on the entire economy itself. I don't know. Barring that, though, I just don't think it's very likely that that's to happen. So therefore, I think it's very unlikely that BTCI would ever stop paying out distributions. All right. So now, with that said, what's more likely to happen is the distributions will fluctuate, but not. I don't think they would go to zero. So, as the volatility fluctuates, as the NAV fluctuates, because the underlying asset is declining and in price or whatnot, then those distributions will fluctuate a little bit. So like the dollar amount will. I'm anticipating at the time of this recording, the next distribution is probably going to be a lower dollar amount, maybe than the previous month, but it also might not either, because if you go to the Neos website right now and you go to BTCI, the yield is actually going up at the moment because the volatility has increased very significantly. So we might get a similar dollar amount this month, maybe not. Who knows? But either way, when you look at the chart of the distributions, the dollar amount fluctuates, but the yield itself is pretty consistent. All right, so I would say this is completely normal for an options-based income strategy where they're selling covered calls. All right, so distributions are going to go up and down. It is what it is. But and actually, I shouldn't even put this here. A pause or reduction is far more realistic than elimination. I don't even think a pause is realistic either, because it's literally their entire business model. Like if they wanted to evaporate their entire business model and just go out of business overnight, then they would pause the distribution, because that is the product. And as soon as you stop providing the product, then you don't have a business anymore, right? People aren't going to buy it. So anyways, always make sure you understand the engine, not just the yield, guys. Understand how these things are actually generating their income. Try to have a good idea of the covered call strategy that is being implemented, because like there's lots of income ETFs out there that do it very differently. I really prefer Neos. I really like their covered call strategy. But yeah, I'll go ahead and wrap up with that. I didn't want this to be too long. I just wanted to address that concern really quick, that question. I do think it's a legitimate question and concern, especially if you're new to income ETFs like BTCI. But yeah, that's my take on that. Would love to hear your feedback. Drop some comments down below. Let me know what you think. Would there ever be a scenario where BTCI would stop paying out distributions, or any of the Neos income ETFs? Let me know in the comments. All right, I'll talk to you in the next one, guys. Take care.